Welcome, everyone, to Capital and BCB Group's first dual interview titled The End of Cash, the Future of Payments, and the Global Adoption of Crypto. I am Baron, your host today. I'm excited to say that with me, we have Capital's co-founder and CEO, Raymond, and BCB's founder and CEO, Oliver. Thank you two for coming today.
It's awesome to be here. Thanks for hosting this.
Thank you. Great. Yes. Today, we're going to discuss the future of payments and the world as the world continues to accelerate the adoption of cryptocurrencies. According to many analysts, paper money is history. In the future, currency will consist of only a digital series of letters and numbers, which is what we call cryptocurrency. So it comes down to, what is the future of payments with cryptocurrencies? How long will it take before most people around the world are using crypto to make payments? Why do companies need to accelerate? What do companies need to do to accelerate the adoption of crypto? Do they need some kind of technology that they're missing? Is government-backed currencies a thing of the past? Well, we're going to go to my two experts to ask them the question. So let me start off with Oliver, and then I'll go to Raymond. My first question is, the crypto industry exploded last year, yet widespread adoption hasn't really happened yet. What do you think is the future of payments like with crypto, especially for this year?
Crypto has teased us what good looks like in terms of payments and as a store of value. But in order for it to get true adoption, it needs that connective tissue to the traditional finance world. It needs critical infrastructure to really bed in, and it needs really powerful agents to get that liquidity flowing. So what Raymond's doing with Cabital is exactly one of the missing ingredients to accelerate adoption, and we're just there to support that.
That's really interesting, Oliver, about how you talked about the industry really needs the critical infrastructure, and you guys are helping do that. What about you, Raymond? How do you see that, and how do you kind of bounce off what Oliver said about the adoption of crypto, especially for this year?
Yeah, I think infrastructure is definitely one, right? So that's why Capital has been doing. But I think there's another important component here is the regulation. So I think the good sign so far is that we have seen that U.S. government decides to regulate the crypto further, basically give crypto a strong legality to sustain and also prosper in the industry for this industry. And also, I think European Parliament also just advanced the MiCA, omitting the ban on the proof of work-based cryptocurrency. So I think that's another important push. And you can also see in Asia, Latam, Africa, the emerging markets also taking off incredibly, right now. And I think unfortunately the war happens in Russia and Ukraine, but people definitely find crypto is a very important way to help them to protect their asset value. So all these early signs, I think is pushing the users to recognize this new payment, new currencies, and new way to manage their assets more. And so I think now is the time to build a strong and on and off ramp solution. And that's why I think Capital offer all the things, including the Capital Connect, to help the users to access to the crypto world. Yeah, so just to be clear, right, we're still at the very early stage. So I think there's more to come in the next few years.
And you made some good points.
If I can reflect on that,
is coming for the industry. Go ahead, Oliver.
Yeah, I just wanted to reflect on some of Raymond's great points there. Regulation is absolutely the key to, one of the keys alongside the infrastructure to opening this market up. But when regulation is only going to catch up if crypto is better understood. So there's a big education path there. I think it's really interesting how it maps, because actually I've noticed your slogan for the first time, crypto without the crazy. When we set up BCB, that was the ethos as well. How do we actually show that this is actually a legit transformation of money? And that's the job we have with the regulators as well, to get them on side, to say, this is not magic beans. This is not, the Wild West. This is actually a sustainable and genuinely interesting innovation that will transform the world.
So when you speak with Oliver, when you speak with regulators, do they seem, especially in Europe, do they seem a lot more open now to cryptocurrencies, say, compared to a few years ago?
I think it's a really mixed bag. We've seen, I mean, in my view, I think Switzerland are really pushing the envelope and are super progressive. They've got some really productive language about how to, the taxonomy of it. What is it? And then what are reasonable ways to regulate it? And that's produced quite a lot of fertile ground for good businesses. But the regulatory landscape in this time zone, let's call it, is a mixed bag. I think the FCA's first approach is looking at the AML considerations, which is a legit starting point. But of course, you made reference to MiCA earlier in the conversation. I think that conversation is only going to reach the UK after a 2-3 year lag. So it's a mixed bag, but there is progress. I think it's the progress is clear, and this market will grow.
That's good. We're seeing some progress, especially in Europe. Let's talk about just kind of crypto adoption, especially with corporates and businesses. So as you guys know, merchants that accept crypto are a lot more interested than consumers because there are no chargebacks or interchange fees with crypto, saving them money and headaches. But with credit cards, people have higher fees and they get charged back, sometimes weeks later. But consumers still use credit cards all the time. Visa and MasterCard are still showing record numbers of spending. What do you think has to change with companies and consumers to make crypto mainstream in everyday lives? So let's just start with Raymond, and then we can go to Oliver.
Yeah, I think the most important thing is that how easy and how trustworthy crypto is for the merchants, right? So I think Oliver touch a very important point, education, right? So but still great that credit card and card payment is the starting point for a lot of merchants to start accepting it. I think Visa also launched the advisory services, and also now putting USD into the list of their settlement currencies. All this is helping the merchants to give it a try and also understand how it works for them. And you also see some very interesting number. 30% of consumer in some countries, in those countries that Visa did the survey, expect the retail store to begin offering the crypto payments this year and beyond. But I think the most important thing is still how to overcome all those obstacles, right? Very high rejection rate, processing fee, the transaction limit, and so on. And that's why I think Cabital wants to build an infrastructure linking not just card payment. We also believe that the very daily, bank transfer type of transaction is the way to go, and that can only be done, by the platform or service provider that take the compliance to heart to make sure they meet standard of the bank. Yeah, so by doing that, we try to lower both the entry exit barrier for mainstream users, because when they know it's so easy for them to get into and come out of the crypto world back to the fiat, so that's something they feel the peace of the mind. So we'll start from the exchange for sure. That's where you see a lot of users, but we won't stop there. We are also talking to a lot of like NFT companies, gamification firms, and then later on maybe back to the traditional merchants that accepting the card payment right now to also take the crypto settlement as a way, or using Cabital as a way. So that's why we always say we try to position ourselves as the PayPal for the Web3 world. We want to make sure that user experience is super smooth, so both worlds, the users and the merchants, they can meet each other easily. Yeah.
I think that holistic strategy is really bang on. It's what this market needs. Adoption is only going to happen if we look at all these streams in parallel, get the credit cards going, get the bank layer going, get every layer of this thing going out. And I when looking at Cabital in the early stage of our relationship, it was clear that you're taking that holistic approach, and that's what's one of the most interesting things about this conversation.
Thank you.
Yeah, I think you guys are right. So like you guys just said, all the streams in parallel, get every layer going, a completely holistic approach. So as you guys know, cryptocurrency is volatile. You guys have seen the price of Bitcoin going. It's been trading between 32 to about 44 for the last month or so. But we have something called stablecoins, right? How do you guys think that stablecoins is going to shape the future of adoption of crypto as a payment? I'll start with Oliver now, and then I'll go to Raymond.
I I think stablecoins are today a mirror of fiat government-produced currencies. And if you're a crypto maximalist, I think you can probably see that in the long term, in the rearview mirror, it'll be a bridge, but it is actually, in my view, a critical bridge. It is the way to say, okay, look, we get that your business is based in dollars and you can't face the intra-week, intra-month volatility of stablecoins, less so of CBDCs, but that's a separate conversation. Yeah, I see them as another essential part of the infrastructure.
And a critical one, you think?
Yeah, I think so. I mean, look, again, it's multiple channels, right? We can't put all our eggs in one basket. We need infrastructure at all layers, and stable coins are, in my view, one of those layers that we can't ignore.
Raymond, what's your feeling on stablecoins?
Yeah, I think it's a game changer because most of the users, when they first learn crypto, they learn BTC, they learn ETH, right? And I think the volatility is one thing really scare them when they try to participate, right? It will be easy for them to make money, but at the same time lose the money, right? But stablecoin is like an anchor for them to say, hey, I want to participate, but I don't want to frustrate with the market value crazily.
Yeah.
And that is a catalyst to the market as well. So you can indirectly participate in this booming economy without exposing yourself to the huge risks. So personally, I think that's the stablecoin is very, very beneficial for all the participants in this ecosystem right now. And you take another route, it's very it's a peg of US dollar, right? Or the other fiat currency. So also interesting, and you start asking yourself whether you want to use the traditional fiat to settle, or now you have a stablecoin option, right? Also US dollar back. And then to transact maybe cheaper, faster, but the thing is, when this stablecoin is getting so big, people start asking, whether that's going to be a systemic risk, because what's really underlying, right? And what's the regulation behind it is still not fiat. So it's interesting to see right now. I think U.S. government's coming into the picture and say, hey, we want to start regulating it. And I think that's the only way for people to understand, what's the stablecoins risk profile looks like. And be honest, you cannot really blame them because there's no rule right now for them to follow. Once there's a rule, I think it's much easier for everyone to follow and stick to that. And so it becomes like Oliver says, it's a bridge, right? So it's something very similar to the fiat currencies, but there's a regulation to make sure the underlying risk is still acceptable for the whole system. But it's also interfaced with a very innovation-driven crypto economy. So yeah, I think definitely a game changer, and the role of the stablecoin will only get more important onwards.
Absolutely. Can I pick up on that, Baron? I think you're absolutely right, Raymond. On the when you're looking at the stablecoin landscape, I think there's a lot of FUD about what's inside the stablecoin, because the most useful way for me to think about stablecoins is to compare it to a bank model. And I'm not suggesting stablecoins should be regulated like banks. That would not be progress. But if you look at a bank model which takes capital and then lends it out again, rehypothecates it, they only need to keep a certain small percentage of actual one-to-one cash, like sub 10% in most cases. If you look under the hood of all major stablecoins with traction, that ratio of cash to commercial paper and other assets is drastically different. It's actually so I think of most stablecoins, legit ones that have good level of transparency, as a super conservative bank. So yeah, I think that there's a lot of myth busting that we need to do to get more people, especially in the institutional market, comfortable with stablecoins, because they are fundamentally a much more creditworthy product than a lot of tier ones.
So both of you guys, I mean, we don't got to talk about specific regulations because that could go on forever, but it sounds like both of you are pro-regulation in some form of stablecoins.
Yeah, I think, we have to work in lockstep with regulators. It's the only way that we're going to get that perfect blend of the perfect transition from TradFi to DeFi. We need to do that in cooperation, right?
Yeah, I think the the two worlds has to work together, because you cannot avoid, right now the two worlds, they are convergent, right? So they are actually affecting each other, like it or not. That's the reality, right? So to protect each of the world, to protect the benefits of every participant and stakeholder, including government itself, they have to manage the systemic risk of the financial markets. And the only way is that they have to come in and balance out the risk and the innovation. So I think it's not, I totally agree with Oliver. It cannot be like 100% like banking type of regulation, but there has to be some transparency for people to understand what the risk looks like, right? But so far there's no rule, and that's why no matter what they do, right, they keep increasing, like USDT, they keep increasing the cash reserve. But how much is enough? No one knows, because there's no rule. But the bank, let's say, okay, you want to lend out the money, you have to keep certain reserve. There's a rule for you to say whether I satisfy that rule or not. And now I think the government should do something very smart to make sure they can regulate it, but still try to encourage innovation, or it will just become another fiat system, which is more slackish, and you cannot really have more upside for the whole society.
100% agree.
Let's move on to the challenges that companies face in accepting crypto. So, as you guys know, a major crypto exchange, said that the number of crypto users is going to triple to 1 billion people by 2023. So that means that companies across the world, regardless if they're pro-crypto or not right now, will have to embrace crypto. What challenges do companies face in accepting crypto? Or in other words, which technologies do they lack? I'll start with Raymond first, and then Oliver.
Yeah, I think, the awareness, education for sure, but also how transparent the information is, right? So for example, let's take DeFi, let's say. When you participate in DeFi, you want to know whether that DeFi protocol is safe, right? What kind of audits they have about a smart contract, what's the right standard? So that kind of transparency education should be critical for more users to join. And also, I think another important thing is that where they can use it. That's why we have to build that infrastructure to help them, right? If you ask a high street person to learn how to do DeFi stuff themselves, that's difficult. So that's why CeFi still exists, how to interconnect with different projects to make sure everyone can participate, and they also make an informed decision. The most terrible thing is that they don't have an informed decision to make; they just guess. So I think that's why the whole industry has to work together and to educate the users to make sure it's transparent and help them to make the right decision, and disclose the risk behind it. And return and risk always go together, right? So that's another thing. And I think user experience is another key part here. That's why you can see that's why Cabital wants to interconnect with more platforms, because rather than for them to open the account and do everything, each of the platform, we want to become that rail to interconnect with every different platforms to help them to easily to use. And it's not just easy to get in, also need to make sure it's easy to get out, right? You don't, when they want to move money back or funding back to the fiat world, it has to be very easy. Or they will have that barrier, say, oh, maybe I shouldn't participate too much because I still don't feel comfortable or peaceful that whenever I need the money out, I need to jump several hoops to get it out. So I think there's a lot of things need to be there, and that's just echo again my point. That's why we want to be PayPal in Web3, because when you're using PayPal, it should be that easy to buy something and to sell something and get the money back to your bank account and the way round. Yeah, so I think that will be the several key points I would suggest that the whole industry work together to bring that more user into this crypto world.
Your thoughts, Oliver?
Absolutely. Yes. So I agree with all of that. Another, we could do 2 hours on this. The challenges in crypto land, but I think the one I'm going to pick just for some commentary here is at the technical layer. So if we look at the trade-offs in using cryptocurrency either as a store of value, as a transfer of value, I have high conviction that Bitcoin is the ultimate store of value. Again, a whole hour's conversation. But if we look at the transfer of value use case, the one that's most likely to get adoption the quickest, every major layer one has material trade-offs, and there's a lot of maturing that needs to happen in that space before we actually get a credible transfer of value competitor. Just as some examples, Bitcoin's block time is 10 minutes, which is okay if you're transferring a large amount, but not if you're buying a coffee. Solana's block time is in milliseconds, but it's a super centralized blockchain. Ethereum's got its well discussed kind of gas fee issues, and all of these have other layer twos to solve it: Bitcoin, Lightning, Ether, sharding, and Solana's own evolution. But what's cool about all of them is that we can see them clearly converging to a transfer value system. And when you compare it to Swift block time, 24 hours, that's the context that's most important here, where you send a payment abroad and hopefully it gets there tomorrow. We've already solved that problem. So now it's just how do we actually refine the trade-offs between the individual layer ones, is the technical challenge, one of the challenges that crypto has today.
I think you're right, Oliver. I just sent some money during Martin Luther King's Day, and if it's over a public holiday in the U.S., it takes even longer. So money doesn't transfer over U.S. public holidays most of the time. So I had to wait 2 days before I could buy some Bitcoin.
Yeah,
so let's just
what we need to do at BCB and at Cabital is to replicate that crypto experience in the fiat bridge. Crypto is a 24/7 market. It flows 24/7. Banks open 9 to 5, Monday to Friday. What we need to do is be part of that 24/7 economy, and I think so far so good.
Yep.
Let's talk about infrastructure, digital infrastructure, because you guys are both talking about that quite a bit. So both BCB and Capital are both building digital infrastructure that connects the fiat world to crypto. First for Oliver and then Raymond. How is BCB solving these pain points for companies and financial institutions concerning payments? And what exact kind of solutions are you providing for this? How are you building this digital infrastructure?
The basic building block at BCB is the bank account. The key to enabling that basic unit of infrastructure is lining up with partners who really get it, who are not in the camp of a bunch of banks who are either terrified of this market or can't access it because of regulatory maturity. But starting with that basic unit and then building the value on top of that, the payment rails in multi-currencies, the FX between those currencies, the instant settlements layers on top of that for both fiat and crypto. These are the key infrastructure solutions that we're building and have over $100 billion of traction in, that directly address that super basic unit of getting these two worlds together. So we've operated the payments layer. So for anybody who's unaccustomed to or unacquainted with BCB, we provide today what we call payment services for market makers and exchanges and the crypto economy as a whole. But now we're deepening, having just bought a bank in Germany, deepening to that bank layer. So we're providing that bank and payments layer on which great businesses like Cabital can then deliver value and do their own business in a much more seamless and frictionless way.
So I think what Capital is doing is also very similar. If you take what Oliver just said, the concept wise. So what we do is that we try to tap into different banking infrastructure built by company like BCB, very solid and very pro crypto friendly. And then based on that, one thing we deal with is that we want to make sure whenever there's a user try to tap into that infrastructure via us, the KYC, AML, all the compliance is assured, right? So we want to make sure when the money comes in, user coming in, that's guaranteed. Does it make sense for all the crypto platform or blockchain projects to access to that platform themselves and deal with the consumers themselves, right? We will deal with the consumer risks and make sure we can be the one interconnect the infrastructure and the user and the platform. So that will facilitate the transaction in a more efficient way and more effective when we deal with those compliance issue. So I think there's strong collaboration between BCB because I think BCB has several currencies, nice FX, and also your crypto settlements are real time. So based on that kind of very highly crypto friendly infrastructure, we put another layer to deal with the users and also interconnect with the other platforms to bring the greatness to the whole ecosystem. So so I think that's a very strong collaboration there.
Yeah, for sure. And the bar is high at BCB. We don't just bank anybody. We rely on B2C companies who've got that solid infrastructure for the compliance side. From everything we've seen, you guys are nailing it, and it's a really natural partnership. And it's quite a good role model for a number of other companies, perhaps less earlier on the maturity curve.
So talking about the partnership, just recently, BCB has helped Capital to accept the Swiss franc in its payment methods. This is very interesting since Switzerland is a very crypto-friendly country in Europe. Raymond, how is Capital planning on helping the people of Switzerland improve their ability to make payments and earn more money on their digital assets?
Yeah, I think thanks for the help from BCB. I think now we are able to accept the Swiss francs for our users to top up and to buy crypto and also sell crypto and withdraw Swiss franc back to the bank account. So the experience is very similar, just like the daily banking experience to move the money around, right? And by doing that, what they can do firstly is to tap into our capital earn product to start earning much higher yield. Then be part of the booming crypto economy. And secondly, right, so what we try to do is that once we have this rail, once we have this infra, we also want to share with the other crypto platform by interconnecting with each other, right? So once the user got the Swiss franc in and exchange to the USDT or BTC ETH, they can also easily and efficiently transfer to the other platform for the other services, and just like instant, rather than waiting, rather than paying the high fee, because we are bank transfer based. So that's really for the users, and for the platform, they can also be very happy working with us because we deal with SSA, right, the AML KYC. So whatever users we push it through or they push it over to us and able to open an account with Capital, I think we can guarantee the compliance levels there and can benefit both ourselves and our clients and the users, of course. Yeah.
That's the way to do
Oliver,
it.
how does this fit? How does Capital fit in your vision of building digital infrastructure? You talked about it a little bit before. If you could just give a little bit more on that.
So we, day one of any partnership like this is let's just get you up and running in the channel that makes that is most valuable to you. Very vanilla kind of. Here's the bank account. You're legit. Let's get this going. But then there's a much more long-term view, which is anticipating how what direction Capital's moving in, and anticipating how we can support Capital in the other services that we offer. So we're always tuned in not just to the kind of day one onboarding for the basic service, but also understanding your purpose and also your velocity as you grow as business, and looking at all of this through a partnership mindset rather than as a kind of vanilla back-end service provider mindset. Almost always leads to much more interesting partnership opportunities down the road that are that deep in the relationship. So as Raymond mentioned earlier, it's early days, but I think both of us have got a sense of what that path looks like ahead, and I'm super excited to support that.
Great. I only got a few more questions for you guys. So let me start off with Raymond. You are clearly a believer in crypto. How do you think it's going to change commerce and e-commerce in the next few years, or even in beyond that?
Yeah, so I think first thing, if we just mentioned, right, stablecoins. If you are an e-commerce platform, you can take US dollar or USDT at the same time. What you're going to do? I think I would prefer USDT. Why? Because as a company, right, you always have liquidity. When you have the liquidity idle in there, you want to generate some more return. That's also another interesting or important revenue source. But when you take US dollar, I mean, the interest rates there, you can see, although we have a 0.25 hike today, but it's still very low. But if you have USDT as your main currency for settlement and reserve as a company, you can always earn much more yield on top of that, right? So that's the same idea applying to the individual, not just for the merchants. And especially, it's super easy for you to move the money around. I think Oliver just mentioned, if you use Swift, you need to consider public holidays. You need to consider clearing and settlement. And the US dollar clearing is sometimes always tricky. Along the way, your clearing bank might do some RFI to understand, this doesn't look right. Even one transaction, it can go through several banks for the clearing. You can get a
Sometimes
lot
a
of
prayer
along
helps.
the way. Yeah. So I mean, you're not doing nothing wrong. They are doing nothing wrong because they just be cautious, right? But crypto financial is a point to point. So it's much. I mean, you still have to, the end point and the starting point. You still need to comply everything for sure, but you don't need to go through the whole chain back to New York for clearing and down to the another side again. So it's quicker, and that's the settlement risk we're talking about, right? And that's something when you do cross-border trading, when you do international trading, that's something you always care, because that settlement risk up to a few days, you have no idea where's the money, and what if along the way the clearing bank has some problem, your money just got stuck. So I believe, if the stablecoin got regulated better in the future, adoption of USDT and USDC, this kind of stablecoin backed by US dollar, will be, become more and more popular, 100%. So yeah, so I think that will change totally, because that means, again, the two worlds will merge together, and then you can start seeing maybe the user can directly using USDT. The exchange between the fiat and crypto might not need to be that level like we see so far, because it's going to be like-to-like settlement later on. Yeah. So.
Bang on. Nothing to add.
Perfect. I got two more questions for you guys. Oliver, you're clearly a believer in crypto, and you sound like a Bitcoin maximist. Are you a Bitcoin maximist? And if so, how do you think Bitcoin's going to transform payments and transform the store of value?
I'm only a Bitcoin maximalist in the sense that just as much as I am in the Apple camp versus Android, Microsoft, and other kind of desktop and mobile operating systems, I view those layer ones as operating systems: Bitcoin, Ethereum, Solana, Stellar, the long list. I think it's not useful to pick a long-term winner as a single operating system, because I think each operating system has its own strengths. Solana's got an inbuilt order book. Ethereum has got a lot, the smart contract innovation. Bitcoin has nailed the store of value. So I'm not a big Bitcoin maxi, but 90% of my crypto portfolio is in Bitcoin. Don't tell anyone.
Wow, that's pretty serious. What about you, Raymond? Is 90% of your portfolio also in Bitcoin?
Not 90%, but I think it's high enough right now. So since I'm in the industry, I think I feel more comfortable to allocate more assets. I think definitely not advice, but personally, what I do is that I believe in this industry, so I still invest in the main coins in a very, I would say, conservative way. Do the dollar cost averaging to make sure I don't put myself in a high risk. To spread out risk and just gradually, because that for me that's a long-term stuff. Now, of course, the stable coin, much higher yield. That's definitely very, very healthy return for everyone to consider. But make sure you go for the right platforms, and and whenever you want to take it out, you still have that liquidity to manage your life. So I think that's my strategy so far, and I believe I'm going to stick to it for quite a while.
Yeah, I'm going to echo Raymond's comment on this is not advice. Backfit that caveat to my statements as well. And also, when you're checking out stablecoins, crypto in general, the one thing that I think a lot of people in this market don't really think enough about is the credit counterparty risk. It is, we need to start mapping some of those old TradFi models onto crypto models because some of those bits were useful. But that's a whole other tangent for a whole other 1 hour conversation.
Okay, my final question for both of you. I'm going to ask Raymond first, and then you, Oliver, and then we'll close it out. What do you think payments with crypto will look like in a decade?
Yeah, you know what? Interestingly, I think at the end of the day, cryptocurrency is just another currency people use on a daily basis, right? We're using dollar, euro, pound, Swiss franc, different currency in different jurisdictions. And when you have more regulation coming in to make people feel more comfortable and confidence about the cryptocurrency, different kinds, when you have metaverse, people call, right, have the merge between the virtual world and physical worlds and different use cases, people will start using different currency in different domain, different protocol, different stuff. After 10 years of hard working of all this industry, and this industry has a lot of smart and hardworking people, I believe in 10 years, the usage of crypto should be the way we use our foreign currency like now. You cannot even feel the difference because the whole thing will be gel very well. I don't even think that will take 10 years, maybe 5 years. The experience will become very smooth. So yeah, so I won't say back to normal, but that's another level of user friendly, another level of understanding, and that means widely adapted by most of the people.
Yeah, definitely. The lens I look at that in is, I think if we look at the evolution of brick and mortar stores to e-commerce, that was a very clear evolution. What we're seeing in crypto is the similar evolution of money, in that the existing systems of money, they're not going to go away, but the vast majority of value will shift the needle along to the electronic equivalent, and how those cryptocurrencies coalesce and consolidate and solve problems that exist today, that's all TBC. But the time frame that we've got from here to that much more crypto-weighted global economy is going to be on a much more compressed time frame than it went from brick and mortar bookstores to Amazon, simply because innovation, the pace of innovation has outstripped everything in the last 20, 30 years. So yeah, a crypto future, but not without, it'll take a long, TradFi is never going to disappear. It'll just become a much smaller part of the economy.
That's great. Great discussion, guys. And I want to thank everybody for watching this, listening to Raymond, the CEO of Cabital, and Oliver, the CEO of BCB Group, about the future of money and cash. To watch the full interview, just follow us on Twitter at Cabital Global. And if you have any questions or comments, email us at bd@cabital.com. Thank you, guys, and I hope to hear from you guys soon.
Thank you. Thank you, Oliver. Pleasure.
Thanks, Baron. Thanks, Raymond. Take care.